Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. Fifth day of conflict between Iran and Israel. Last night it looked like things were thawing a little bit, but that's not the case. I mean, if anything, risk sentiment is soured once again this Asia morning. I'm Prashant. With me, my colleagues Nigel and Mangalam with us today. Guys, morning.
Hi, morning.
Good morning. I was on leave for a couple of days, and yesterday I was traveling, and it just seemed like so long because of the news cycle. In the 2 days that I wasn't there, there was that unfortunate air crash that took place. Thereafter, all that took place globally, and then in the West Asian region. So it seems like it's been so long. But then again, I look at the market. It's 24,950 on the Nifty, which is virtually unchanged. So much has happened, but we're still back in that range.
Well, that's right. And overnight, actually, we were hoping for some kind of de-escalation, which is still not forthcoming. So I think that will continue to linger on. Hopefully, more than markets, as I always say, for the good of humanity, we should see some kind of resolution on this front and some kind of de-escalation. Global leaders will, hopefully talk and come out with a solution. But those images that you're seeing in the past, 12 to 18 hours don't suggest any kind of de-escalation, at least as of now.
Yesterday at about 9:30, oil was down sharply, gold was down, U.S. futures, U.S. equities were higher, but all of that turned very sharply. And I think
scariest visuals that came yesterday was that of the missile attack in the newsroom itself. Right? These are extremely disturbing visuals that we can see.
No, absolutely. And I think really air warfare in the skies, and you can see all these sort of missiles being fired that at least right now only Iran and Israel against each other, and others have not joined, which is of course being closely watched as well. So let's just take it from the top and run you through some of the cues. So last 12 hours have seen further escalation in hostilities between Iran and Israel. And this is, as I said, a big change, because yesterday evening it looked like things were thawing a little bit, but that was not the case. I'm not even actually looking at where we left off in terms of U.S. close, because the actual close in U.S. was S&P, Nasdaq 1.5% higher, U.S. yields up about 5-6 basis points, dollar flattish, oil prices down. But, well, does that close really matter? Because, things have turned, things have moved on since. And what really caused the turn in risk sentiment on the downside was President Trump. So two things. President Trump said that he's going to leave the G7 summit early to return to Washington, I guess, to oversee the crisis. Second, and I think this is the headline which which got markets' attention. He essentially tweeted, posted on Truth Social, saying that everyone should immediately evacuate Tehran. So I think that one comment really sparked, and this sort of came through in early Asia hours. And that turned sort of sentiment around. So S&P, Nasdaq futures, the last I checked, and of course, these are all rates which will move along. Very difficult to kind of sort of look at this minute by minute, but about 0.5% lower in S&P and Nasdaq futures. Oil prices up about 1%, actually 1.5% now up on your screen. Gold prices about 0.5% higher, back above $3,400. Yields are down, which means bond prices are up 2 basis points. It's small, but still. And of course, the DXY, dollar index, is up about 0.25% or so the last I checked. The bigger question, which we don't have answers to at this point, is if U.S. will join the fight. To that regard, you basically have, two naval carriers. The USS Nimitz, which is one of the largest carriers, aircraft carriers in the world, along with the earlier carrier, which is already sort of in the region, in the Persian Gulf region. So there are two aircraft carriers now at the ready in that part of the world. It's been moved, by the way, from elsewhere. And you have over 31 U.S. Air Force refueling tankers, which have also been moved. And all of this, of course, is being... So far, U.S. has maintained this is essentially to protect its interests, its bases in the region, if it's attacked, etc. It's a defensive posture, as I think it's been put. But I think, so much social media chatter whether, U.S. essentially will join the fight and help Israel against Iran, etc. So I think it's a situation which needs to be watched closely, and we'll see if this escalates further at some level. It kind of sort of, is there an off-ramp? I mean, what is the off-ramp here? I think that needs to be seen as well. At what point will Israel say, well, we've achieved our objectives? And the objective, as they said earlier after they attacked Iran first, was, to prevent Iran from not achieving a nuclear status, not having a bomb. So how do you sort of, evaluate that success in that sense? So to be watched. Let's just look at and tying the levels here. So yesterday, of course, the market saw a very sharp bounce after Friday's sharp sell-off. And we are at about almost 24,950 or so as of yesterday's close, about 1% higher. Resistance is 24,968. By the way, we are there. That's a 66-point retracement of the small fall that we had. 25,062 with the 78.6% retracement. These are very, very near-term levels, but that's essentially what you got to work with. Support stands at the 20-day, which is 24,832, and the lower end of the range which the market has been in, which is 24,500 on the lower side. So 24,832, the 20-day, and then 24,500. The Bank Nifty pullback was much weaker as compared to the Nifty yesterday. Here we're still below the 40-hourly exponential moving average. 56,000 is that level. Again, very close to it. And of course, after that, you got the 56,403 level, which is a retracement level, similar to what we had as far as the Nifty is concerned. So some numbers, some levels out there on your screen. General risk off a little bit in Asia hours is what you have, about 40 points lower, pretty undecided. I mean, the general bias around the world for markets has been to try and buy the dip. Dips have been very, very shallow, short-lived, etc. But I think the risk, of course, comes through oil prices, if at all it comes to that. And it's not a non-negligible risk that you see a big jump if, for example, the Strait of Hormuz or other oil facilities, etc., are attacked. So that's how we are looking at things. Mangalam.
Yep, so the Nifty implied open right now is close to around 40 points on the downside, but we're among the only Asian indices which are indicating a lower start, because we have the Nikkei, which has opened higher, we have the Kospi, which is trading fairly in the green as well, barring the Seng, which is down by about 0.1% or so. We have most of the Asian indices doing well. So three things basically we're watching out for. One, I'll be, very closely watching out for the outcome of the Bank of Japan monetary policy. Why is that? While they are expected to keep the interest rates steady in the face of trade and geopolitical uncertainty, they had a quantitative tightening program that ends on in 2026. Are they likely to, lower the quantum of quantitative tightening or not is something that we'll most definitely keep an eye out on. Yes, Prashant spoke about the Iran-Israel conflict, but amidst all of this, two things happened yesterday. One, the US volatility index cooled off by about 8%. That's a positive. And secondly, Nasdaq outperformed. Can it outperform today as well? Why do I say that? Because one, OpenAI has won a $200 million US defense contract. That is generally NVIDIA positive and, the chip maker positive. And secondly, one of the bigger contributors on Nasdaq, Meta, will bring ads to WhatsApp. And if we here are looking at, the popularity of WhatsApp, any ad, coming onto WhatsApp after so many years could be revenue generative for Meta. So I'll be watching out for, reactions on those stocks in particular, and as a result of which, Nasdaq. The Indian indices did well in yesterday's trading session, but we're still in the broader range of June 11th high, the post-RBI policy high, and the June 13th low of 25,222 to 24,473. The big question, are we back after the volatility over, geopolitical uncertainty, etc.? Are we back to the pre-RBI policy range on the Nifty of 24,700 at the lower level to 25,100 or not is the question. And the answers to that will be, how two stocks perform or two sectors perform. One is Reliance. It's done well in yesterday's trading session. Brent moving near $75 per barrel typically does well for oil and gas stocks, and upstream companies benefit. And the second part is IT. IT did well in yesterday's trading session. But if you look at the distance away from the 52-week high, the Nifty bank is just about there. The Nifty is 5% away. And the reason why the Nifty is 5% away is because Reliance is 11% away and the IT index is about 15% away. So these two have to really outperform for the Nifty to break out. And were these two outperform, all other things will fall into place as well. The DIS bought in cash market yesterday, FIS sold. If these two sectors are doing well, they will attract flows as well. And from a technical standpoint, we're very close to the 20-day moving average on both the Nifty as well as the Nifty Bank. So those will be important supports that I will be watching out for. Chances are that we may be in the range, but there is a possible up move that we may see after the down move. Nigel.
All right, Mangalam, yesterday the most encouraging part of trade was the advanced decline ratio, because when we started off, there were very few stocks that were trading in the green. But by the time we wound up, we had a higher number of stocks that were advancing than declining. But if you look at the volumes on the whole, they were much, much lower than what we saw on an average. If you compare it with the 10-day average, and in fact, the volumes that we saw were the lowest all the way since May 6th. So that recovery that we saw in yesterday's trading session, well, it did come on very, very large volumes. And just going by the breadth of the market told you a lot of domestic large HNI retail audience were at play yesterday. You would like this move to come on larger volumes. What do the FIs do as well as what do the clients do? On index futures, they had a bit of a role reversal. So the FIs added long positions in yesterday's trading session, while the clients, they went ahead, they unwound some longs and they added some short positioning as well. So you didn't see a big short covering bounce coming in from the FIs, but for the market on the whole, on the Nifty Bank, there was clearly a sign of some kind of short covering that did play out because that index recovered from the low and the open interest was down by close to around 3.5%. What about stock futures? It appears there's a bit of an arbitrage play that was taking place out there because there was long addition coming from the FIs. And if you look at it on the short side as well, there were some positions that were added from the clients. But that would be more sort of a arb or reverse arb that was taking place on that front. But one interesting factor in yesterday's trading session was the kind of writing that we saw on the put side. And that's giving you some kind of hope that maybe in the near term, we can defend that range 24,500, 24,700. Because both the FIs take a look at the put shots, much more than the call shots. And even clients, there was a higher proportion of put shots that were seen. So there was put writing that was seen in yesterday's trading session, which gives you some hope in a market that bounced up. A lot of put writing is normally a good sign. What about the options data? You have two broad levels you're looking at. This 25,300 calls, some out of the money call buying in case things go well, then maybe in fact make some money on that. But the smarter money actually was writing that 24,800 put. And that's encouraging from a bullish perspective. So it brings us to the levels. Since there was writing at this strike, you're looking at this 24,700 mark as a crucial support. Today, by the time we end, and during the intraday as well, I wouldn't want this level to get violated to a large extent. Yesterday's low was 24,704. So that becomes an important mark on the downside. On the upside, well, the recent high, that becomes a bit of a resistance. So the Nifty continues to remain in this range of close to around 700 points. The Nifty Bank, that's going to be important. And in yesterday's trading session, what was encouraging was every day, if you look at the day's low, well, it's been sliding lower. But yesterday, after a while, we made a higher low, which is a positive sign. So for today's trading session, you'll not want this level, in fact, to get violated on the downsides. That's 55,300 odd. Stocks that I'm looking at, well, I'm looking at IEX. The stock has got hammered in the last few trading sessions. Now, in fact, it comes out of the F&O ban. So I'll keep an eye out on this stock because it went down to around 185. And at that level, you've seen some kind of buying interest that re-emerge. So keep an eye out on this one, guys.
Absolutely, and I think there is, a fair bit to track in terms of positioning, in terms of levels, and of course, news flow as well.